Hi, this is Joe Shahada from Top Tier Capital. Well, today was a pretty big down day in the markets, but it's not necessarily the start of something new. Just because we have one down day doesn't mean it's all over here. So we have a lot to cover, so let's just get right into it. This first chart is the S&P 500 futures, and now you can clearly see this is the long uptrend we've been in now since the beginning of the year. And it looks like we have closed below that trend line. Now, this isn't a definitive breakout of the trend line. We've had little pieces along the way where it's kind of still close to that line, so we still want to consider this line to be support at this point. If we would have closed a lot lower, maybe in this area or something, then we would call it definitive. But at this point, we could easily pop right back into that channel, so we can't call it just yet. So for now, the trend is still pretty much on. Now, there are a few things that we were concerned about that we mentioned yesterday in last night's video. The important thing here is the RSI was overbought back here. It was above 70. And then we had a few days go by, and then we went right back into the 70 territory. That was yesterday. And that's usually a very bad signal. It means very, very overbought. Bad signal for the bulls, that is. Maybe great for the bears. That's usually a good entry signal for a short, but there were a couple of other factors going on, so it wasn't the best. But you can clearly see what happened now after we hit that level. I'm not saying lower prices yet. I'm going to still stay with this trend. As long as this trend is still here, we have to assume one day doesn't mean anything in this market. If history, has taught us anything in the past, which I think it has. Let's look at the Russell. Same thing with the Russell here. The Russell's been in a fabulous uptrend. It went down really hard. We had it massively oversold on the RSI as well, but it's still kind of closed right around that trend channel. And just because it got a little bit overextended doesn't mean much. We can still find support here. So I would still expect higher prices moving forward until we get a definitive breakout of this trend. I'm going to keep drumming that home because it's just true. It's one of those things that I hold to be true. And I'm a drummer, so it makes it even easier to drum that one home. So let's move to the Dow Futures. We had the same thing here, although there was a kind of laggard situation where we moved sideways for a while, and we tried to break out of that yesterday. It looked like we had a breakout of this sideways channel, but not really. So we're still in the uptrend here. We had a bigger breakout of the trend line that we were in, this uptrend line, but for the most part, we're still kind of in this laggard sideways activity. I would expect the Dow to go sideways / higher in the next few sessions. Otherwise, if it breaks through all these levels, which it could do very easily. By the way, all of these markets could do this very easily. In one day, it could be definitive breakout. But if we do that, then I would expect lower prices. And I would expect for all these indices, I would say almost this entire trend, maybe 2/3 of this trend to be eclipsed by a down move. So I wouldn't be surprised for maybe 2/3 of this move to be taken out. Maybe prices back down to the 13.4 area and such. Okay, so let's move to, before we go to the Nasdaq, let's move to Apple really fast. Apple is the stock to talk about because, well, it got smashed today. As a matter of fact, looking it up, it was down 2.4%. So, what happened here? We had this big downtrend channel that we've been talking about a whole bunch, and it proved to be a resistance a couple of times. When we hit that recently, we came off of it. But now we're back in this sideways trend channel that we were in before. And this proved to be a nice congestion area, a decent support area. So I actually think if we can get down to 440, we'll find some bulls again. But for now, it looks like just ugly on Apple. This isn't really unexpected. As long as we're in this downtrend, we want prices to go lower to confirm that downtrend until we're definitively out of it. But if we do get a little bounce off 440, I wouldn't expect it to last for very long. But so I wouldn't be surprised if we see lower prices in Apple, even lower prices in Apple moving forward. Let's look at the 60-minute in Apple today. You can clearly see that we've been in this downtrend since the highs about a few weeks ago there, and we confirmed that downtrend here. We're now massively oversold on the RSI in the intermediate short term here, but so I wouldn't be surprised if we have a little bit of a pop, at least off the open tomorrow. But once again, as long as we're in this downtrend, I would expect it to hold. So we'll have to see what happens there. And now the Nasdaq. This is the one that's been interesting. It's been going nothing but sideways. And we had a little bit of a breakout here that didn't materialize. We just went sideways, and that's usually a bad sign for the breakout. And just like we had yesterday, we had all the stock indices up yesterday. The Nasdaq had a little push, tried to make it up, but it couldn't go past this kind of resistance area, and it got crushed lower. So maybe the Nasdaq was our signal that this was a little bit overdone on as far as the rallies go. But anyway, that's our analysis for today. I'm just expecting prices to continue the way they are, even though we had this one down day. There's nothing to get too worried about here. But if we do break out, once again, expect a decent correction. But anyway, that's all. Thank you for watching. You can find everything at toptiercapital.com. We have a lot more news and analysis there. We also analyze currencies and oil and things like that. So please check that out. And yeah, that's everything. Thank you for watching and happy trading.